Done?
Oh, here we go.
All right. If there's a will, there's a way. If you wait long enough, guidelines will change. And the guidelines that just changed just made it easier to buy a home. What's going on, guys? My name is Min Win with What's a Mortgage. Welcome to our channel. The goal of our channel is to educate, empower, and to connect you with the right mortgage. If it's your first time tuning in, do me a huge favor, hit the notification or subscribe button so you're notified every time we go live or post new content. We go live every Monday night at 9 p.m. on Facebook and YouTube, and we post content daily on Instagram and TikTok. So if you want to see daily information on mortgages, don't forget, follow us on Instagram and on TikTok. All right, guys. Also, this is an interactive live stream, so ask a lot of questions. All right, guys. Let me turn this off really quick here. Little beep beep beep. So Fannie Mae, right? One of the two main powers of mortgages just made it easier for you to buy a home, right? If it was hard enough to get a mortgage, especially going conventional, one of the major powers, which is Fannie Mae, there is something called Freddie Mac out there, but most people deal with Fannie Mae. They just made it easier. They made it one step closer for you to get a home. They changed two major guidelines that made it easier for you to get a home. So, what the changes Fannie Mae what did Fannie Mae change? Okay? So the two changes that Fannie Mae made was they made a change to rent, right? On time rent. And the second thing they changed was your credit score. That I feel is a big one. If you are buying a home with someone else, it's really going to help you who are buying a house go with a higher score to qualify for conventional loan, right? These with Fannie Mae, it's going to be a conventional loan. Okay, so these two changes right now, I think, are going to help a lot of people who wanted to go who wanted to go conventional. They had to go FHA. Now they can go conventional. They have that flexibility when it comes to going conventional, right? Also with credit score. Okay, so a lot of people they want to when you go conventional, you need a higher credit score. Now with the new rules, it's going to help you be able to go conventional. I think it's very big changes. I think it's really going to change how people get a home, right? People don't have to go FHA all the time anymore. It's going to give that flexibility. I really think Fannie Mae did this for two reasons. Because one, they had to do it because of HFHA, and because I think they need to draw more business away from FHA, right? So those are the two big changes that are happening. Um, to credit change to credit qualifications, right? So first of all, what is Fannie Mae? If it's your first time tuning in, or if you don't own a home, or you do own a home but you don't know what Fannie Mae is, Fannie Mae is short for Federal National Mortgage Association, a government-sponsored enterprise founded in 1938. Fannie Mae is a private held agency established by Congress to improve credit flow in the parts of the U.S. economy. It became publicly traded in 1968. Fannie Mae right now, though, is under conservatorship. Why? Because of the crash of 2008. Because of the crash of 2008, the government came in, bailed them out so they can preserve and conserve their assets and property. Right? So, because of that, that's the reason why they had to make these changes. Fannie Mae didn't go and go, hey, let me announce we are making these changes to rent, right? To count rent in qualifying for a home. It wasn't their decision. It was the decision of FHFA, right? So here's the first change, right? So the first change was not controlled by Fannie Mae. The second change was the first one, the Federal Housing Finance Agency recently announced that positive rent payment history will be taken into account in Fannie Mae's underwriting system for conventional loans starting the weekend of September 18th, 2021. Okay, so with you making your payments on time, now they're able to take your on time rent payment to count against you qualifying for a home, right? And how they do it is it's through desktop underwriting. So when you get a loan, you can do something called manual underwriting or automated underwriting. As you can tell, Federal Housing Finance Agency is making Fannie Mae change their underwriting system, their automated underwriting. They call it DU, some call it DO, depending on who you're talking to, right? So they're changing the automated system. So when your loan officer does your loan application, right? They put your rent in there and you've been making that rent payment on time, they're going to take that as compensating factors in the DU, right? It's going to help big time, right? This is how it helps. Right now, if you go conventional and you have under a 700 credit score, they're either not going to qualify, even though Fannie Mae allows you to go down to 620 if you don't have a huge down payment. Let's say you're going 3% down or 5% down, there is a chance you won't pass DU. You won't get approved eligible. You'll have to go under a manual underwrite, which right now in the seller's market, no one's really chasing a manual underwrite borrower, right? If a seller, I'm going to sell either cash or a road of less resistance, right? So they're going to change the system. So if you were trying to go conventional and you had, I think, like a 660 to 700, right? Most likely you were going FHA. And a lot of people don't want to go FHA because, you know, they don't want they don't have the huge down payment, so they have to go FHA. But some people don't want to go FHA because they want that flexibility that the private mortgage insurance can fall off automatically, not have to refinance out of it, right? Right now, rates are at an all-time low. People want to take advantage of that, and a lot of times they can't because they can't get the DU or the DO to pass. Even though conventional, Fannie Mae allows you to go down to 620, you won't pass if the automated system doesn't pass you. But with this compensating factor of rent, it is a game changer. Now, if you were buying conventional and you couldn't pass, I think this is going to push you over the edge for you to pass. Okay? So who does it help? Who does it help the most, right? So if you, of course, you're in the 720, 740, 800 credit score, most likely this is not going to affect you, right? Who's it going to affect? Low income and minority communities. 29% of Black consumers say insufficient credit scores or credit history is the biggest obstacle in getting a mortgage. Fannie Mae found that 17% of those would have been approved had their rent history been considered. 17%. That means it would give more flexibility to 17% of buyers, right? Also, it would help Black consumers qualify for conventional. Fewer than 5% of renters have rent payment reflect in their credit report. People didn't bother to add their rent to their credit report because it wasn't reflected. Now it is. We'll talk about how to get it on your credit report, right? Take into account rental history is particularly important for the 20% of the U.S. population. 20% disproportion Blacks and Hispanic consumers that had little established credit history. If you didn't have credit, right now, your rent can help you build your credit. Yes, there's other systems you can use to add your rent on there, but a lot of lenders weren't doing it for their borrowers. I think it's really going to change the game to add your rent on your credit report. It helps your credit score. Now, Fannie Mae, which is the main, if you talk to most lenders, they're going to ask, they're going to run DU or they're going to run LP. But most people run DU, which is under Fannie Mae. If you talk to most sellers, who the real estate agent is, send me a copy of the proof of funds, send me a copy of the credit report, and send me the copy of the DU. No one ever says, send me the copy of the LP, the loan prospect. Everyone always asks for the DU. It's like industry standard, kind of like General Motors, right? So every car has to pass General Motors inspection level, right? So it doesn't matter what car. Same thing. Most people are going to try to pass DU. So DU now, it's taking rent. That is a game changer, okay? So what are the requirements for them to take your rent, okay? So here are the requirements you need for them to take your rent, right? All right, here we go. Wait, actually, one last thing. How does it work? Right, how does it work, right? What?
How does it work?
Yeah, how does it work? My bad, guys. We're doing this new slide thing, so bear with me for a second. How does it work? It will help increase home ownership opportunities for borrowers. Fannie Mae is enhancing their underwriting process by considering a borrower positive payment history in their credit asset. Okay, so like I said, they're putting it in the DU. So there's nothing you have to do on your behalf except for making your rent payment on time. When the borrower is currently paying at least $300 or more a month for 12 months, and they can verify it through an asset report, right? So DU, they're going to be able to verify the report of however you make your rent payment on time for the past 12 months for at least $300 or more. It's going to give you compensating factors in the DU that will push you over the edge to either qualify or now you can go conventional. So it's going to give you that flexibility so you don't have to go FHA if you don't want to. Of course, how they're pricing it, we don't know. But now it's going to allow more borrowers to go from FHA to conventional. And some borrowers to even qualify. Some people don't have the 3.5% down, and maybe they have the 3% down, and they can take a higher rate to cover closing costs, right? Everyone is in a different situation. It's like, oh, that's only a 0.5%. A 0.5% can mean a big difference for some people, right? I, myself, no one is here to knock anybody at their chance to owning a home. So if they have the 3% and they don't have the extra 0.5%, right? Now they can go conventional. Even if they don't have a 720, 740. If they pay their rent on time for at least $300 a month for at least 12 months on time, and they can prove it. So if you pay cash and you can't prove it, that's where I think the big problem is going to be. They're going to have to electronically validate it, okay? Here are also the requirements for them to take your rent. Number one, you must be a first-time home buyer, which means you can't own a home in the past 3 years, okay? The borrower must have been renting for at least 12 months. So if you just started renting a place, right, or you didn't report it, now they're going to need a 12-month history. The borrower's rent payment must be at least $300 a month or more. And this is for purchase transactions, right? It's not for refinancing. You can't own a property. You can't be renting somewhere and refinance another property, right? And it's only for purchase transactions. Okay, the property must be secured by a principal residence, right? It's owner occupied only. The borrower must have the correct credit score, which is going to be 620. So you need at least a 620. But like I said, between that 620 to 700, people weren't really passing DU. If they did, it either had to be a big down payment or really low debt to income ratio with tons of asset. But if someone has tons of asset and have a big down payment, a lot of times they won't have that 620. Right? That 620 to 700 was for the low moderate income where, you know, you're doing your best to pay your bills. You just can't crack that 700 because you don't have payment history, right? But now you have your rent, right? A lot of times because of lack of credit, they can't get that 700, 720, whatever position you're in. Now is a chance for you to buy a home without having to go out and get 3 or 4 credit cards, rack up bills, pay it off, right? Of course, there's people that can do that, but if you're not in that position, now's your chance, as long as you pay your rent on time, okay? Last but not least, this is where the kicker kicks in. The lender must obtain a VOA, verification of asset report, with 12 months, right? 12-month bank statement data through an authorized DU validation service. So when your lender will handle that, they will go through a DU validation service, right? They will either check your bank accounts, right? They will check your bank statements. They're going to check something for you to get it, right? So definitely, guys, make sure you have your accounts accessible to your loan officer. So what is a verification of assets, right? So they used to call it verification of assets, or they call it a VOD, verification of deposit, right? It's going to be 12-month bank statements. So if you pay online, they take it out of your bank account, they're going to draw 12-month bank statements and make sure you pay rent. But be careful, right? If they see other withdrawals on there that's not on your credit report, it's an obligation that can affect your debt to income ratio. That's where I think it might affect your DTI, depending on what they're taking out to pay, right? Also, 12 months cancel checks. If you don't want to give the electronic pay, 12 months cancel checks. And this is where I think it's getting a little in the gray, right? This is, we don't know for sure, rental karma. So let's say you don't have 12 months cancel checks. Let's say you don't have bank statements, right? Or you paid in cash, but you can get rental karma, right, to report on your credit report. It will report on your TransUnion and Equifax, which will help bring up your credit score. It just doesn't work on Experian. So if you do pay in cash, right, or there's no way for you to prove it through bank statements or through cancel checks, go register on Rental Karma. They can go back 24 months, right? And they can go moving forward. Experian, though, so they'll report on Experian and TransUnion and Equifax, but they're not going to report on Experian. Experian only accepts ongoing rental payments if you pay rent electronically, right? So if you pay electronically, most likely they're going to get it through the bank statements. But if you're trying to pop your credit up, right, get Experian to report it, okay? Use Experian Company to report your rent. So those are ways to improve your credit, to have the history on there for you to prove that you're paying your rent on time. $300 a month or more, right? Owner occupied, first time home buyer, and now you're able to buy a home, right? I feel like this rent is really going to push people over the edge to qualify, right? Middle United States, I think it's gonna be a big deal, right? If you were buying LA or on the coast, right? If you were teetering, I think on West Coast, you're teetering from FHA, now you can go conventional. In the Midwest, I think a lot of people who have the 3% down is gonna put them over the top. They can buy now. They don't have to save that 0.5%. Oh, it's only 0.5%. 0.5% to you might not be a big deal, but it could be a big deal to someone else, right? Every dollar counts. Okay. So right there is the big change. And it's gonna take place September 18th. If there's not enough buyers in the market and you feel like the market's going to get cold, we just brought a bunch of more buyers, right? 17% of people who would have qualified now qualify, right? 25%, 29% of the black consumer, right, now has credit, right, through making their rent payment on time to buy. So we're bringing more buyers back in, even though everyone's saying, oh, the market's going to get cold. Yes, it is flattening out a little in certain areas, just not on the coast areas yet, even though there's reports. They're not taking into consideration cash buyers, but now we just brought more buyers back in the market, okay? That's change number one. Change number two, the credit, right? They are going to, Fannie Mae, we don't know if Freddie Mac's going to do this yet. If it does, I will announce it. But right now, Fannie Mae changes the way they're reviewing credit. It's going to affect multiple borrowers on one loan. So if there's one borrower on the loan, they're going to go with the middle score. But when there's multiple borrowers, they're going to do it different. So if you're buying a home alone, it will not affect you. Home alone. But if you're buying the home with someone else, it will affect you guys in a good way. Like when I talked to my boy Sal, I'll tell you a story in a second. And like I said, it's for conventional loans only, and it's going to affect DU or LP, right? DU or DO, desktop underwriting or desktop originator, right? September 18th. These two rules are going to kick in. This one will affect your credit score. And this is how it's going to work. If there's multiple borrowers above a 620 credit score, right? Multiple borrowers above 620, they're going to average out your two middle scores. First, DU will determine each borrower's applicant credit score. Middle of the three scores receive of the lower of the two when only two scores received, right? If you only receive two scores, they're going to take the lower. If you receive three scores, they're going to take the middle score. Second, DU will average the applicable credit scores for all the borrowers on the loan case file to determine if the 620 credit score required is met. So what does that mean? If you have two credit scores, they're going to merge it together and give you the middle score. Here's an example, right, of two borrowers right here. So if borrower 1 has 590, 619, 648, borrower 2 has 661, 693, 693, the average score is 656. They will use the average score, right, to make sure you have the right score now to qualify to buy. Will they use that score to give you a better interest rate? I don't know. They're just merging the two scores to give you your credit possibility. I'm one of our clients right now. His name is Sal. He has an 800. His lady has a 711. So right now, they're going off the 711. But after September 18, they can run DO again, right? 711 plus 800. Divided by 2, the average. Now they, instead of being graded with a 711 credit score, you're graded with a 755, right? So how does that affect PMI? How does that affect interest rates? We don't know yet. But now at least when DU and DO, when they're looking at your file, they're going to gear it off the 755. Even though her middle score was 711, his middle score is 800, now they have a 755. It's positioning them in a better position to go conventional. Let's say you were a borrower that had a middle score of 620 and your spouse or whoever buying with you has a 750. You had a 620 plus 750, 750 plus 620, right, divided by 2, you're at 685. See how it's bringing your credit score up? Now you can go conventional. You're not having to push to go FHA, right? But yes, if you have a low credit score, you can add yourself as an authorized user, pay down debt. You can do things to bring up your credit score more. So when they do take the average, you have a higher score. So those are the two changes Fannie Mae is making to make it easier, right? So it will be easier to buy, right? One time, right, on time rent is going to count for underwriting calculations and the credit score, right? These are two big changes that's going to cause people to push them into home ownership. Also pushing them away from FHA, going conventional. There's more flexibility with conventional, with PMI, but now there's more people empowered with the correct information, right? So they can make the best decision out with their family, and also so Fannie Mae can give them an appropriate rating so they can go conventional. Hopefully that was useful information. If it was, do me a huge favor, save this video, share this video, and like this video. If you know anyone who's looking to buy a home, don't forget to tag them on this video, all right? So they have the right information. Empower them. If you care about a friend or relative or co-worker who's going to buy a house, please empower them. Tag them on this video. If you're buying a house and the person who's buying is not watching with you, tag them on this video. You want to tag these people because you want to empower them, right? Knowledge is power. Home ownership is the biggest investment they're going to make in their life. They should know their choices. And a lot of times people don't know they have choices because they're limited by the information that's out there. Hopefully, that's the goal of our show, is to educate, empower, and to connect you with the right mortgage. All right, guys, let's get some Q&A here. If you have questions tonight, we got answers. Scroll to the top. All right, I'll take over here the mouse. Hi, Dad. How you doing? Clarabelle, what's going on? What's going on, Jesus? The new credit, what's the new credit score? Brandon, hopefully I answered that. What's the new guidelines? Hopefully we answered that for you right there. What's going on, Alex? Lorena, Erica, Junior, Kalido, Kenneth, best way to find property tax and assessment. Call the county tax assessor, Kenneth. Some cities you can look it up, like Fontana. I know it's 1%. But some cities it's really hard to look up. I would contact the county. What I would do, Kenneth, call the county, give them the list of the cities you're buying in, and find out what the tax rate is. Hopefully that helps you out. What up, Lorena? Starla, what's good? Michelle, you've been on forever. What's up, Michelle? How you doing? Raquel, what's going on? Georgia, Candy Vega, Chan, Kathy Fung, how you doing? Rochelle, what do we need to provide our rental history? Hopefully I answered that question, Rochelle. Marcelo, Tracy, what's going on? Jose, what happens if you change jobs a week before closing? Jose C from YouTube, what happens if you change jobs a week before closing? If it's in the a week before closing, they're going to ask for 30 days of pay stubs. So you might need an extension. It all depends on the underwriter's discretion. But right now, because of COVID, there is a rule out there that they want 30 days of your new pay, right? If you rely on overtime or bonus, it will affect you heavily. If you're just going based on salary or hourly, right, they might do it. Some lenders, they want a month worth of pay stubs right now because of COVID. Hopefully that helps you out, Jose. Good luck. Thug Blaster, what's going on? Love the name. I heard this will increase 17% more people. Yes. Do you think this will drive up prices, more demand? I think it will bring more people in the market, but I think it's going to bring more people in the market in central United States. Will it bring more people in California or Florida? Maybe not. Idaho, Nevada, Arizona, Midwest, I think so, significantly. East Coast, maybe, the North, where prices are a little lower, right? But California, Florida, no, I don't think too much. All right. Thank you, Teresa. Thank you, Ruby. Already working on my DTI. That's right. Work on that DTI. Get that DTI low. We're going to be going over DTI in the next couple of weeks, Ruby. So don't forget to check that out. Is it Christian? We're doing, what? Christian. What's up, Christian? Where do you think rates are going to be around December and January? So, Christian, I don't know. I predicted rates were supposed to skyrocket in June, July, August. Guess what? I was wrong. Rates actually dropped. My prediction, rates should stay low after September. I think when the rude awakening kicks in and there's no more free money out there and people are going to start using all their free money, right? And all that money is gone. I think we're in for some deflation. Honestly, I think with deflation, I think rates are going to stay low. We will see who can afford to buy them, right? I think rates are going to stay low, which drives up prices, right? I think rates are going to stay low going to after September, October, once we realize how much money we don't have. If I were you, I would watch the 10-year bond. We're at 1.25 right now, right? If the 10-year bond drops under 1%, rates should be dropping. Hopefully that helps you out there. Christian, Shoddy, what's the quickest way to boost your credit score? Shoddy, quickest way to boost your credit score. Add yourself. So payment on time payment history makes up 35% of your credit score. So if you add yourself as an authorized user on someone's credit that has a long history, low utilization, and on-time payment history for a long period of time, it will help boost your credit score. Okay. Also, another way, paying down debt. Your credit utilization makes up 30% of your credit score, right? On-time payment history makes up 35%, right? Utilization makes up 30%. So if you pay down debt, it will boost your credit score up. Or if you have credit cards and you've had a good track record, call them and have them increase your credit score. I mean, increase your utilization, which means if you owe $1,000 on a credit card, she can get 2,000, right? That will bring it up. Let's say you owe 1,000 or you owed 500. Well, you're at 50% utilization. If you're at 2,000, now you're at 25% utilization, which brings up your credit score. Yes, a hard inquiry, which makes up 10% of your credit, will affect your score. But if your utilization, if you increasing your limit takes your utilization from 50% to 25%, that counteracts the hard inquiry, right? But if you're sitting at like $1,000 utilization, and like let's say you the limit it's $1,000, you owe $900 on it, they increase you to $1,500. You have a hard inquiry. It's not really going to change your credit if they only raise it by $500, right? Make sure the utilization will push you above 70%, right? You're at 30% utilization. Keep it under 30. If that does happen, it will counteract the hard inquiry. Hopefully that helps you out. Robert Chen, what's going on? What if self-employed? Can I go 1 year tax returns? If you go conventional, Robert, 5% down or more, and you've owned your business for 5 years or longer, then yes, you can go 1 year self-employed. I actually like that, Andy. Robert Chen asked a great question, right? Robert Chen from Facebook. What if you're self-employed? Can you go 1 year self-employed tax returns? Is that sufficient? It is sufficient if you go conventional, which means you are going conventional, you go 5% down or more, right? If you've been self-employed for 5 years or longer, or you own the business 5 years or longer, you can go 1 year self-employed. Hopefully that helps you out. They will ask your CPA for a P&L, all right? Hopefully that helps you out as well. Rudy, what's going on? Leo Palomino, what do you think the market will do next year? I don't know, Leo. I don't think the market, everyone who's expecting the market to crash, I don't see it happening, right? I see right now rates are back in the twos, right? A lot is giving more time for more people to lock into the forever rate. So if people are locking in the twos, and prices come down, they just hold on to their house. If they hold on to their house, it's going to keep prices from coming down. Unless the government comes in and bails out our economy by building a bunch of houses at a loss so they can unload more houses in the community and stop foreigners from buying up and hedge funds from buying up homes, then yes. But right now, there are so many hedge funds buying up homes, right? One out of every buyer in the United States is paying cash, right? 1 out of every 4. That's 25%. That's a lot. And at the top of the market, they're buying that, right? You got China, Germany, Australia, Russian hedge funds buying up the United States, turning our economy into a rent country, right? Unless the government comes in and does something about it, I don't see prices coming down. I don't see it coming down right now. I think the best for most millennials who cannot afford to buy this price range, I see a lot of people migrating more to the Midwest, where they're going to work in California or Florida. They're going to still work where they work right now and make their money. They're just get paid the same, but live somewhere cheaper. I see that happening, right? But I don't see prices coming down. I see it at most flattening out. I don't see it coming down, right? Let's say rates skyrocket, right? Rates skyrocket. And if I was selling my house and I can't afford to get to my new home because payments are too high, I just hold on my house. It keeps demand. It's just going to keep demand from entering into the market, right? Hopefully that helps you out there. Junior, is it possible to go a conventional loan 3% down in Cali? Yes. depending on where you're buying. Remember, you got to keep the loan in conventional loan limits, right? Regular conventional, not high balance. Hopefully that helps you out. Question: what's the gap in employment you can have when you're trying to buy a home? Um, Typically, Ruby, it's 6 months. Because of COVID, they're allowing 12 months. After that, it's one. You have to be back at work for 1 year, right? It all depends on if your lender is going to honor the COVID. There's overlays out there that some lenders might not honor the COVID rule, right? If you got laid off because of COVID, they're giving you a 1 year break. But if you got laid off and it wasn't COVID, it's 6 months, right? Depends on what you tell them. They can't really verify that. What's going on, Bell? How you doing? Thug Blaster, we bought new. It's been 6 months. I want to refinance. My home value doesn't show up online yet. Is it possible to refinance now, or do I need to wait? Your value doesn't show up online, Thug Blaster, but definitely reach out to a lender. They work with appraisers, other realtors. They can do value checks. Your home might not show up in value, but what you can do, Thug Blast, wherever your home is located, look for homes a half mile to a mile radius. Look for a comparable sale within the last 60 or 90 days. It's hard to find comps right now because there's not enough homes for sale. A lot of people, the home is not worth it. It's not worth it because it doesn't come in value. Homes aren't coming in value not because there's no demand for it. They're not coming in value because there's not enough comparable sale. You're not going to find 3 homes that look like yours within a half mile radius within 90 days. It's near impossible. That's why it's hard for appraisers to really justify the value right now. Oh, I know it's worth that because if 10 people are willing to pay for it, right? Or I should be able to refinance because I have tons of value. I'm not saying you don't have the value. I'm not saying the house is not worth it. There's just not enough comparable sales. So Thug Blast, right? Look for comparable sales. You can't find any, reach out to a lender. There's other strategies they can use to do that. Hopefully that helps you out. Starla, Lavon Faulkner. I love that name, Faulkner. My DTI is high because I work part-time, but my FICO score is 770. I have a big down payment. How can I get my DTI lower? So if you pay down debt, you can lower your DTI, okay? Pay down debt. Right now, let's say rates are at 3%. For every $340 you pay down, that gives you $50,000 more home, okay? Hopefully that helps you out. Jan, do you know how much interest rates are at the time at 10% down? You're going to be looking in the high 2s right now, Jan. Hopefully that helps you out. Hopefully you have a 740 or higher. You're looking in the high 2s right now, okay? Gretchen Ballon. Hi, Min. If I'm stuck with an FHA loan because of my 650 credit score scheduled to close at the end of September, how soon can I refinance and what will the cost be? So if you bought your home with an FHA loan or conventional loan, it doesn't matter. If you're trying to go conventional, right? Or if you're trying to refinance, they will not let you use new value to do your refinance till after 6 months. Some people are saying, oh, because if you refinance within 6 months, the lender has to pay back the commission. That is true. But refinance is different than purchasing. If you bought a home, you can't use the new value. So you bought a home, the next day it's worth 100% more. You can't use that new value till after 6 months. They want that value to hold up. So you have to wait 6 months. Depending on what you're doing with your refinance, should cost between $4,000 to $5,000. You either can pay for it with your equity, pay for it out of pocket, or take a higher rate and cover it. There's different ways to do it, right? But of course, if your loan amount is $200,000-$300,000, it could be less, right? It all depends on your loan amount, but typically you're looking between $4,000 to $5,000. Hopefully that helps you out, Gretchen. Cambo's Barbecue. What lender can I go to take advantage of the new changes? I'm a first-time home buyer. Anyone that sells their loan or follows Fannie Mae Guideline, which is pretty much every lender, right? They'll run DU. You talk to a lender, Cambos, hey, ask them, do you run DU? Do you run DU? If they run DU, you should be fine. Hopefully that helps you out. Noble Stefan, do you think the stock market is going to crash? I lose value in my VA home loan about to buy. Do you think the stock market is going to crash? I think the stock market is going to crash. I don't think home values are going to crash, right? I think the stock market is going to crash. I don't think home values are going to crash, right? People are at different places with their homes. They can hold on to it, right? If you bought the stock market and you bought with your own money, right? You use cash to buy stock. If it tanks, you're fine. but majority of people bought on margin, especially rich people, right? That's why they cut off Wells Fargo, cut off their credit lines, right? If you look at the stock market, there's more money leveraged in the stock market than there ever has been. People bought on margin. When the domino effects of that start tanking, I think people are going to be in bad situations, right? It's going to start a recoil, a domino effect, not recoil, a domino effect, right? But your home, let's say, if rates go up, people hold on their house, right? Right now, if you own your home, you bought your home before 2019. Not all, but majority of people who bought before 2019, they don't have PMI. Their mortgage payment should be cheaper than rent. Single family homes rent went up 5% this year, right? So without PMI, your principal and interest and tax insurance should be cheaper than rent. Hopefully that helps you out. So that's why they don't have to let go of their house. If their mortgage payment is cheaper than rent, why would they do anything? Let's say their house is upside down. They're not paying, it's still cheaper than rent. April Ramirez, I'm getting a bunch of refinance offers. I'm interested, but how do I know which lender to go with other than just who offers the lowest rate? Ask for loan estimate. April, you want help reading and beating the loan estimate? Reach out to us, right? You can give us a call, 714-790-9697. You can email the loan estimate to info@whatsamortgage.com. When you're getting the loan estimate, April, you want to look at page 2, section A and B of the loan estimate. Those are the fees you want to compare with other lenders to see who's got the best deal on the block. Hopefully that helps you out there, April. Everything else, no matter which lender you use, should be about the same. What up, Rudy? How you do? Ruby, you're back on. And Gigi, what's going on? And Gigi Berries, love that name. Hi, man. What's the advantage between FHA and conventional if both allow low down payment? FHA will allow you to buy with more flexible credit, right? And flexible income. Let's say you have a high debt to income ratio. Conventional will give you the flexibility for PMI to fall off. They both have their advantage. Let's say you have a BK that's 2 years old, you got to go FHA. Let's say you have a 52% DTI because you have co-signers who can't go on the loan. That's why your DTI is so high, right? Or people who's helping you with the mortgage payment, they can't go on the loan. Your DTI is too high. You got to go FHA, right? But let's say you have good credit. You have a low DTI. Conventional, you don't have to worry about spending money to refinance again. Your PMI will fall off eventually. April, also, Zillow shows I gain approximately 144,000. How accurate is it? It's decently accurate. You might be off by 20, 30,000, but you should be fine, April. All right. Santino, what is the best lender you recommend? It all depends on your situation, right? If you're doing down payment assistance, I recommend a lot of the big banks. If you are refinancing, I like mortgage brokers right now. Mortgage brokers have the best refinance rates. If you are a first-time home buyer, I do like direct lenders and big banks right now because they do that underwritten approval, right? It all depends on what you're looking to do, Santino. Guys, if you need help educating, empowering, connecting with the right mortgage, message us. You always can message us, right? I am on Messenger as much as I can be. I do have a team that does help me, so we try to reach out to you. Yes, we do have a chat bot. Leave the question that you want to leave and answer the questions so we can get back to you with the appropriate answer, right? I'm trying to get to as many people as I can. I really appreciate all you guys who have followed the page, who have, supported the page, right? Who leave awesome comments. For those of you who haven't left comments, please leave a comment on our reviews. It does help us out a lot. But, I'm trying my best to get to everybody. We want to give everyone the same care and love. So when you guys go through our chat bot, it's not me thinking I'm too big time. I'm just trying to get the right information so I can put together a game plan. So when I call you, I'm not calling going, but that's all, folks, right? I'm trying to call you. I'm not from the Toon Squad, all right? I'm trying to call you. When I reach out to you or my team, we want to know your question. If you answer these questions, we know how we can help you. Let's say you don't tell us what state you're in. Florida is a wet state. They fund differently than a West Coast California state, right? The property taxes are different in Texas. It's 2% compared to California, right? So it all depends. So please, we want to get to everybody, and I really appreciate everyone who reaches out. If you want to know what lender to use, help you shop your fees, help you make sure you're not getting hustled. Like this weekend, we had 3 loan estimates. They were good. I told them stay with their lender. But yes, you have the right to know if you're getting hustled or not. If your lender is dodging you, right, like the IRS, right, then you have every right to talk to another lender. Don't be afraid. But when you reach out, be patient. Patience, grasshopper, all right? What up, Thug Blaster? Thank you, thank you, thank you. Thank you, guys. Thank you, guys. Raska, if I'm thinking about buying a car, 30 to 40K, I make 50K, 30 to 40,000 on a car, I make 50K per year, and looking to get a home, should I buy a car or submit credit for home? Buy a home. Remember, we had somebody. So they were both their car payments were $1,800 a month. $1,800 a month, right? $1,800 a month. So because of their car payments, they can only afford a home for $500,000, right? If they didn't have those two cars, they could afford they can afford $250,000 more in home because of both their car payments that depreciate. So before you go out and get that new whip, get that home, and then get a whip or a car appropriately once you have your mortgage payment, right? Your home will appreciate. When you lock in the cost of housing, right, it won't go up. But now you're in some boo-boo home or home that you don't love because your car payment's too high. So this person, think about it, they have two car payments that are worth $1,800. This person wasn't happy buying a $500,000 home. They eventually did not buy because they're not willing to get rid of their cars, right? They both of them had low balances. They could have just paid them off, but they didn't want to, right? So it all depends on what's important to you. Some of you guys, you might not need a home. Some of you guys might live out your car, and it's important for you guys to have that nice, expensive car. But if you are serious about home ownership and you want to put your home first, then do not get a car. Rascal. Thank you so much. What up, Noble Stevens? Robert Shen is qualified for HELOC the same as qualifying for conventional loan. Yes, a HELOC will have maybe a lower DTI. They might not let you hit 50. You might have to be at like a 43. It all depends on who are you getting your HELOC through. You're getting through US Bank. What's going on? To my boy Simon. I sent all the HELOCs to Simon at US Bank. He knows the guidelines in the back of his hand, and he does all HELOCs, right? I don't get any credit for it. I just trust him to make sure your HELOCs go through. But there's companies like BVACC Credit Union, which I've never heard of. They are more aggressive with equity line of credit. It all depends on who you reach out to, Robert. That's a good deal, Noble. Dude, Noble Stevens on blast trying to sell loans over here. Can't hate the hustle, Noble. Noble, if you get deals from What's a Mortgage, make sure you treat them good. If not, I'm going to hunt you down. All right? Make sure you treat these people good. Right? I might send that Londini on you. He's catching trollers right now. DL, how much does having 3 collections on your credit score affect you? Getting a mortgage, 660 FICO score. If your collections are over 3 to 5 years old, leave it alone. If they're within the first 2 years, it is affecting your credit score. If you can get a deletion letter, pay it off. If you don't, leave it alone. It is what it is. How I would counteract that, if the collections are too new, right? They're not. If the collection is new, there's a high chance you're gonna get a deletion letter. If it's over 3 years old, just leave it alone. What I would do is add myself as on someone's credit to boost my credit score. Remember, on-time payment history, right, is 35% of your credit. Your collection affect that 35%, but adding yourself as an authorized user on an account that's been paying on time will boost it back up, because the punch in the face is the collection, which you're just eating the bruise right now. There's not that much more that it can do to your credit, but you adding yourself will boost it, right? Or you paying down debt or increasing your limit, right, will boost it. Hopefully that helps you out. Gretchen, why do we have to pay upfront PMI as well as monthly MI? Gretchen, with FHA loans, it's flexible. Think about that. On FHA loan, you're getting a rate in the low to mid 2s right now, right? You're getting a low interest rate. You need low down payment or flexible credit or flexible income. That's the reason why it's a big risk to them. That's why there's upfront and monthly. Hopefully that helps you out. April, thank you so much. Listen quietly. Is it better to refinance with a mortgage company you have a loan with? No, not all the time. It all depends. Listen quietly. Just ask them, give me a loan estimate. Also ask them, are you going to transfer my escrow balance? If they say yes, boom, it's a plus. But find out what their rate is. Look at page 2, section A and B of the loan estimate, right? I would first, will they transfer your escrow balance? If yes, ding, that's a positive, which not everyone does, okay? Number 2, just ask for a loan estimate. They have your business now, doesn't mean they own your business, right? Because of that, sometimes they're not going to give you the best deal because they don't think you're going to shop them. But you got to do what's best for you. Listen quietly, right? San Diego in the house. DL, will getting a third credit card negatively impact my credit score? For how long? So DL, so new credit affects 10% of your credit, right? So now on-time payment history makes up 35%, right? Utilization makes up 30, and the other 15% is made up of payment history, like payment, or sorry, history of credit. So when you get a new credit card, it brings down your credit score. Why is that? For example, if you have let's say you have 2 credit cards with a 10-year-old history, and you go out and get a brand new credit card with a 1-year history, so they average the 3 years together, it brings down your score. It'll bring down your score initially because you have a new history, which will bring down your credit because you don't have enough payment history. Okay, so be careful doing that. I would ask for a limit increase on your 2 other cards before adding that 3rd card. Hopefully that helps you out. My boy Min, making sure it ain't getting hustled. That's right, Rick G. I love that. And GG Berries. Is there any lender that lends money without proof of income anymore? Yes. It's called non-QM. And so you know what interest rate? It's because our income changed drastically within a year or so. You're probably going to go 10 to 20% down. As long as the business has been around for 2 years or more, some people say 5 years, some people say 2, you're probably going to be in the 5 or 6% interest rate. Hopefully that helps you out. 10 to 20% down. German Raymond, they're going to charge you 2 points, by the way, so you know. You have an awesome team. I was very happy with all the info was given. Thank you so much, German Ramos. Brenda was good. My friend and I want to buy a triplex, but he is self-employed. Does this hinder our application? I have stable job and we both make 90K save. Should we wait? Brenda, it all depends on how much your friend has written off. Remember, when you buy a triplex, you can use rental income from the other 2 units to help you qualify. Don't lose hope yet. Reach out to a lender and let them run the numbers for you. You don't have to run credit right away. Just run the payments, let them see the tax returns from your friend, and look at your income, and then put the numbers together. All right. Raska, what's the average amount I would qualify for if I make 50K a year and have no rent history? So if you make 50K a year, it depends on where your credit's at, right? If you have no rent history, but you have credit cards and car payment, that will help. If you have no credit at all, go add yourself as an authorized user and go out and get 2 secure credit cards. In about 6 months, you'll be able to buy, okay? But if, let's say you have no debt, 50 grand a year times 50 grand a year divided by 12 times 45%. So you can afford $1,875 right now. If you have good credit, you could probably afford $300,000 on the purchase price, 3.5% down FHA. Hopefully that helps you out. Miguel, I want to buy. Feel like I'm ready, but not sure if now is a good time. How is the market? If you are buying long term, it's always a good time to buy. Lock in the cost of housing. Okay. Yes. Oh, this guy all says it because he's a lender. Then wait it out. They just raise rent 5%, right? If you are buying to live in, it's always a good time to buy because you're securing the cost of housing from rising in your life. I wish they would have taught us that in high school, right? When was the last time you saw deflation? If it is, it's rare and it's for a short period of time. Long term, it always inflates. There's too many people in the United States. We keep on letting in more people. People keep giving birth to more people. People are living longer. And because property taxes are going up so high because of demand, why would anyone sell an upgrade? So if you can find a home in your price range, in your payment range, secure that cost of housing as quick as you can. All right, hopefully that helps you out there, Miguel. Ruby, new construction home with their own lender won't give you a fixed IR until you move in. Is that true? I don't know. It all depends. I don't know. Please reach out to me. Noble, very much appreciate the help on everything from morons like copy and paste information challenge. Dang, Noble Stefan is just pressing hard on rates. Hard on rates. All right, guys. I got to end the night. All right. No more questions. I really appreciate everyone who saved this video, share this video, like this video, and tag somebody. If you're not following us on Facebook or YouTube, definitely do so. Especially help me out on TikTok and Instagram. All right, guys? Also, if you need to reach out, give us a call, 714-790-9697. Or you can email us if you want us to help read or beat your loan estimate, info@whatsamortgage.com. All right, guys? We want to end all our episodes with Our attitude is gratitude. Without you, there would be no us. So thank you so much. Love VA. Get that VA ASAP. If you have questions, guys, please reach out.